everyone, it's Stephanie Ketcher at Remax and Love Living in Kitchen Waterloo. We're here again today with Lucky from Mortgage InGenuity, and we're going to learn a bit about what happens after you purchase your home, but before you close on it. So maybe that's a 2-month period, maybe it's 3 months, but basically you've gotten your mortgage, you've gotten your approval, you haven't paid a dime for it yet, but your new house is coming up and you're very, very excited about it. But you need to be careful in this time frame in between. So Lucky, what would you suggest to do in between your approval and your closing?
Well, once you get the mortgage approval, there's a list of conditions that we meet. So we do this together, right? I always kind of go through the 3 major things: down payment, income, and credit history. Whereas the down payment's pretty easy because you know how much money you have for the down payment. Income, please keep your job until closing, because that way your income will stay the same. The credit history, what in credit history includes is your monthly payments. So your monthly payments can be any credit cards, loans, line of credits, any of those 3 things. The reason why I mentioned those is because if you are, let's say you want to buy a new car, or you want to finance furniture, or any of those things, that actually affects the application because you're going to be increasing your monthly payments, which actually can change your mortgage loan. Some people don't realize this, but the lenders can actually go, after you get an approval, if they see a substantial change or they see any monthly payments increase, the conditions actually has changed because it's different from the agreement that we had. So I always tell people, you know what, if you want a new car, if you can afford it, you want new furniture or whatever you want to buy, please wait until after closing. Once you get those keys, date's closed, you got the money, you got your house, that's up to you. You can buy whatever you want at that point, because that way your application is completed and it actually is closed and there won't be any changes at that point in time.
I have a personal story about that. So we bought our home 14 years ago. We live in a century home, and we were really, really jazzed to replace the kitchen because it was pretty crap in the house that we bought. So we went to Home Depot and financed the kitchen on a Home Depot credit card. Guess what? That changed our credit rating at the time. We took out 1 more item of credit, and then we had to make sure that was paid off before we moved into our home so that didn't show up on our record anymore. Do you see that happen often?
We don't see it happen often, but it does happen. So my example that I had someone have for income purposes is once you put an offer in a house firm, you've accepted that offer and you accepted the conditions that you meet. Let's say you wanted to quit your job. Your income has changed. You have no income, and that actually changes the agreement of the mortgage. So you actually no longer approve for that mortgage. So what you would have to do in that case, you can find another job. Another example I had is somebody bought a motorcycle. So a month before closing, this gentleman purchased a motorcycle, and their monthly payments for the motorcycle was $800 a month. Now you can see if your mortgage payments are, let's say, $1,400, and that's how much you can get approved for, you're basically taking away the amount you can borrow as a mortgage, and they weren't approved anymore until they actually paid off that motorcycle. So what I recommend in the finance side, I always tell people, keep your income the same, keep your monthly payments the same. If anything, lower them if you can, if possible, up until closing. After your house closes, you get your keys from your lawyer or your real estate agent, then go for it. Go get the new kitchen, go buy that new motorcycle if you want. After closing, that's up to you because your mortgage is completed at that point.
So moral of the story is, once you buy a house, before you close on it, stay the same.
Yes.
Don't buy furniture. Don't buy a car. Don't get excited you have all kinds of money, because you need to make sure that all the approval you have stays in place correctly and that you don't basically put that into any kind of jeopardy before you close on your property. So stay the same and make sure that mortgage approval is all good.
Yes.